Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Philippe Wolgen. He's the CEO of Clinuvel, a global biopharmaceutical company focused on developing and commercializing treatments for patients with genetic, metabolic, and life-threatening disorders, as well as healthcare solutions for the general population. Philippe, it's great to have you with us. Welcome to Trade Talks.
It's a pleasure seeing you.
Thank you. And Clinuvel Pharma has been performing well in a difficult operating environment. What can you attribute to that?
Well, a number of factors. We generally take a very reversal approach to risk and risk management. In a contrarian approach, in the buoyant market, we typically prepare ourselves for down cycles. That is reflected in the way we operate our cash, operate the business. So it's a very different approach to pharmaceuticals and biotech, where we're already aware that it's fraught with risks. So one is risk management. The second one is really the way we operate. We're trying to bring all the functions in-house, so that's called a vertically integrated model. And therefore, we try to dominate parts of the supply chain. At the moment, we are controlling the back end, and we're working ourselves slowly up to the front end of the supply chain. And we manage staff in a quite a different fashion. We treat them like equity owners. So our staff that retains and remains a long time in the company are really operating the company as owners, co-owners. And that gives you longevity, it gives you stability. And the fourth one is really we disintermediate when it comes to distribution and market access. We disintermediate third parties. So we control the logistics of product supply, we control the communication with hospitals, but certainly and most importantly, we control the price and the discussions in the tripartite manner with the hospitals, the care providers, and we want to play a key part in that communication and discussion.
Most foreign issuers seek access to Nasdaq to raise capital. Are you preparing to do the same?
Well, that's a loaded question, because the approach to Nasdaq is quite visceral. Most of the biotech and pharmaceuticals companies, they seek funding on Nasdaq. That is really the avenue to continue as a going concern. And we think that the legitimate approach to Nasdaq should be by presenting a compelling business story with a growth trajectory, with a prospect of growth. And that's really the stage where we are. So we take a dual perspective. Amongst all the stakeholders that we serve, you have the clients, the patients that we serve, but also the shareholders. And taking a shareholder's perspective, there can be no apprehension which of the models is preferred. So in going to the markets with a position of strength is preferred in our view.
Right. So let's dive in a little bit more about that. So it seems that you have hesitated a bit to list on Nasdaq. Why take this approach?
Well, hesitation is probably not the right word. What we are aware is that you and I, men in general, are attributing an underweight to improbabilities and uncertain conditions. That means that when you enter as a foreign issuer a new environment, there is no precedent to allude to the fact that you're going to succeed. And so we need to redefine what success is. But amongst the 600 Nasdaq biotech and life science companies, we continuously analyze which precedents there are of foreign issuers actually succeeding. And so if we stay with the topic of value, if you look at 26 of the issuers in 2017, and you look at the tally of these 26, about 31% are trading now above their initial IPO price, 46% below, and about 20% have transacted out. Either they're no longer in business, or they sought an exit trail. So in 54%, you've got successes. In 46%, you've got disappointment. And you will really want to belong to the 54% of these companies that succeed. So it's not hesitation, it's more like an awareness and going methodically through a checklist in order to stack the cards in your favor.
So Clinuvel seems to be in a strong financial position and performing well, and that may be attractive to U.S. investors. Are there any other reasons that might not say cause hesitation, but for why you might hold back a bit?
Well, you're teasing out our approach. Our approach, without giving too much away, is we are working methodically along a list, a 21-point list, and that was constructed in 2010. And remarkably, that list has on very few points have ever changed. And that 21 list of criteria needs to be grounded, worked slowly, gradually, until you reach a level of satisfaction. So at the moment, we're about 81% of the list and criteria have been fulfilled. And so there are 4 outstanding. And for one is like the valuation of our pipeline. Are the analysts, the markets starting to value your future pipeline? And 2 is the visibility amongst the US investors, and keeping in mind that this company is a bit of an anomaly in Australia because we have 30% US shareholders, including the ADRs. You've got but a third European and Swiss, and a third Australian. So truly we are 2/3 already a foreign entity as it comes to the Australian markets. And so if you honor the list of criteria that you believe is the objective measures of success, then we're almost there. And so there are 1 or 2 that we're working on, and then we come to a level of comfort where we have more or less achieved our own scorecard.
Right. So then what criteria remains to be fulfilled when you know it's the right time?
That's a very good question. So we fundamentally believe that the foreign issuer needs to have a broad management team on the ground. So we have got a management team in San Francisco. We are expanding the team with experienced managers from the US. So you need to have a US-centric operation. And the other part is you need to have multiple revenue streams to provide stability to the markets. So in general, we are inching towards the last 2 criteria. Yeah.
All right. And Philippe, before we conclude here, tell me in a few words what makes Clinuvel different to other companies in your sector, and what should our viewers remember?
Well, in terms of assets, we make the asset technology subservient to the asset people. It's human capital, social capital, purpose capital. So in this entrepreneurial environment, the team makes the company. It's a cliche, but it's so holding true for this company, given its history that started 41 years ago in the US, and with an earmark to bring it back. So it's technology first, it's people first, technology second. It's a focused technology and a focused company that really hones in on its skills and expertise. None of us is playing golf, so we are 100% committed to what we do. It's almost a 27 commitment to a business. And third, we are on a growth trajectory. So you need to understand your future milestones that you can propose to investors. And fourth of all, it's a translation of the technology in multiple applications and to multiple markets.
Right. All right. Philippe, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
It's been a pleasure speaking to you. Thank you.